Hi, welcome to Money with Mark Albert. Today we're going to look at the first-time homebuyer incentive, but we're going to do it in 5 minutes. We're going to go over an overview. Today the program launches, today being September 2, 2019. And it's a really exciting program if you're a first-time homebuyer. Now my contact information is going to be on the last slide if you need assistance and you're in the GTA. But right now it's real important to educate you on what this program is all about. So who qualifies for the program? Well, you have to be a first-time home buyer, and only one person who's on the purchase and sale agreement has to be qualified as a first-time home buyer. Now, to qualify, you have to be someone who's never bought a home, or in the last 4 years, you've not occupied a home that either you or your current spouse or common law partner owned. And if there's a marriage breakup or a common law partnership breakup, you would then qualify even if you don't meet these criteria of first-time home buyer. So what is it? It's a shared equity mortgage between you and the government of Canada. Now the federal government, they have a crown corporation called CMHC. So it's a crown corporation of the government of Canada, and they're actually the program administrators for all of this. So they're the ones that issue the incentive and approve the incentives. The program launches September 2, 2019, which is today at the time of this video. And so the purchase and sale agreement, when you buy a house, you cannot buy it prior to that date. And the close date on the home cannot be prior to November 1. Okay? So the incentive is basically at 5 or 10%. Now, if it's a new construction, you can choose either 5 or 10%. Everything else is 5%. And when you pay the loan back, the government will share in the upside or the downside of that. And it's going to be based off the fair market value. So whatever the value of your home is worth at the time. So maybe an appraisal might be needed. So the incentive is actually going to be set up as a second mortgage, as a lien on your property. You're not going to have to pay it back in terms of any regular payments. There's no interest bearing. You pay off any time. If you sell the house, you have to pay it back. You must pay it back. And maximum term is 25 years. So at the end of 25 years, if you're still living in that house, you have no choice. You have to pay it back. So this program is going to have an annual budget over 3 years, 3 annual budgets. The total, $125 billion spread out over 3 annual budgetary amounts. So at the end of a budgetary year, if the resources run out, what's allocated to that may not be available incentive for people. Contact information, of course, my contact's on the last slide. So if you're in the GTA and you want assistance to process one of these, I'd be happy to help you. If you have any questions, you could either contact me through this video or the Government of Canada. They have a toll-free number set up here. It's a very good number. I called them. Very helpful. Now, to qualify, you can't have more than $125,000 as a household income. Okay? If a guarantor is needed, if you need a guarantor and let's say they're not on title, their income actually counts towards this total here. So the insured mortgage and the incentive amount cannot be greater than 4 times the household annual income, whatever it happens to be. Who qualifies? Canadian citizens, permanent residents, and non-permanent residents who are legally authorized to work in Canada. So the way it works, there's like a maximum amount that you can put down. So you can't put 20% or more as a down payment. So if you get a 10% incentive, the max you can put down is 9.99%. Okay? Likewise, if you're getting a 5% incentive, you can put down 14.99% and still qualify for the incentive. So in terms of closing date, if it's an existing home, it can't be 6 months from the time of the application approval with CMHC. If it's a new construction, it can't be 18 months of the time of the approval with CMHC. And the closing date cannot be later than this March 31st, 2024. Okay? So debt servicing ratio. So it is a loan, but it won't work against you in terms of your qualifying ratios on the mortgage. In fact, it'll help you because it'll bring your first mortgage payments down lower, which is fantastic. It has to be a home in Canada, suitable for full-time, year-round occupancy, owner-occupied only. If you have a house that is 2 to 4 units, you can, as long as you're living in one of those units. CMHC as program administrator, they will approve it, the sale of your home, and here's my contact information. Love to help you if you're putting through a home, if you need to buy a home anytime soon. Listen, have a great day. Take care. We'll talk to you soon.